Let's talk about the American dream. That shimmering ideal, often just out of reach, yet constantly dangled before us. White picket fence, two-car garage, golden retriever. The picture of suburban bliss etched into our collective consciousness. It's more than just a house. It's a symbol. For decades, we've been told homeownership is the ultimate goal, the cornerstone of a successful life, the ticket to wealth and stability, a secure future for you and your family, the promise of building something lasting. But what if that dream comes with a hidden price tag? What if the path to that idyllic image is paved with unexpected challenges and financial burdens? The story goes, rent is wasted money, a constant drain with nothing to show for it. A mortgage builds equity. Sounds logical, right? You're investing in an asset, building wealth over time. But this idea is so ingrained, so deeply embedded in our culture, questioning it feels almost un-American, like you're betraying some fundamental principle. The truth? Homeownership as a guaranteed path to wealth is one of the most successful marketing campaigns ever conceived. A narrative carefully crafted and relentlessly promoted. We see the highlight reels, the perfectly staged photos and celebratory posts. We got the keys, but not the late-night panic over repairs, the unexpected expenses that can quickly derail your budget, or the mounting bills, the property taxes, insurance, and endless maintenance costs. So let's pull back the curtain and look at the fine print beyond the glossy brochures and the smiling faces. Because for many, the American dream can quickly become the American debt trap, a cycle of financial strain and worry. Let's break down what you're really signing up for, the true costs and commitments involved in chasing this elusive dream. You bought a house, congrats! It's a huge milestone, a dream come true for many. You've probably envisioned cozy nights, weekend projects, and making memories within those walls. But you've just moved in with some expensive, invisible roommates. These aren't the kind who leave dirty dishes in the sink. These are the financial obligations that come with home ownership. First, and most significantly, your mortgage, the principal and interest. This is the foundation of your home ownership costs. Early on, most of your payment goes to interest. It's a slow burn towards building equity, so be prepared for that initial imbalance. Next, property taxes, your non-negotiable subscription fee to the local government, and it can go up. These taxes fund essential community services, but they can definitely impact your budget. Then, homeowners insurance. The bank requires it to protect their investment, and if you live in a risky area prone to floods or hurricanes, it's even pricier. And if you're in a condo or planned community, say hello to HOA fees, another monthly bill forever. These fees cover community upkeep, amenities, and sometimes even utilities. So your real monthly cost isn't just the mortgage, it's PITI principal, interest, taxes, insurance, plus any HOA fees. That's the number that matters. It's the true cost of keeping a roof over your head each month. These costs add up fast and they're not optional. They are essential for maintaining your home and staying in good standing with your lender and local government. Home ownership means budgeting for a lot more than just your loan. You need a comprehensive plan to manage these ongoing expenses. Miss one, and you're in trouble. Late payments can lead to penalties, and in severe cases, even foreclosure. The real cost of owning? It's a lot more than you think. It's a long-term commitment that requires careful planning and financial discipline. Don't let the monthly payment fool you. Advertised rates often exclude these crucial additional costs. That's the real number you need to know. Understanding the full picture empowers you to make informed decisions and enjoy the benefits of home ownership without financial surprises. Picture this. It's January, you jump in the shower and ice-cold water. Your water heater's dead, basement's flooded. If you rent, you text the landlord. Their problem, not yours. But as a homeowner, you call the plumber, pay the bill, and handle the mess. Repairs like this aren't rare. They're inevitable. Experts say to budget 1 to 4% of your home's value every year for maintenance. That's thousands a year just for things breaking. Roof, HVAC, appliances, they all fail and never at a good time. Without a solid emergency fund, you're one bad day from a financial crisis. Home ownership means you own every problem too. It's not just a house, it's a commitment to constant upkeep. Welcome to the club. Hope you're ready. The hidden costs, they're real, and they don't care about your budget. Renting is throwing money away. It's a common refrain, often repeated without a second thought. But is it really? Is homeownership always the superior financial decision? Let's do the math and take a closer look at the true costs involved in both renting and owning. We need to move beyond the simple sound bites and delve into the details. Rent is $2,000 per month, a straightforward, predictable expense. Buy a similar house, mortgage is $2,000. Seemingly comparable, right? But add $400 for property taxes, an unavoidable cost of homeownership, and $150 for homeowners insurance, protecting your investment from unforeseen events. Then there's $300 for routine maintenance and unexpected repairs, because things break, and when they do, you're responsible. Now you're at $2,850, a significant jump from that initial mortgage payment. The renter pays $2,000, period. No hidden fees, no surprise bills. The homeowner pays $2,850, juggling multiple expenses and responsibilities. And most of that isn't building equity. A large portion goes towards interest and other fees. What about appreciation? The promise of rising home values is a powerful motivator. Sure, homes go up in value, and that can be a great benefit. But it's not guaranteed. Real estate is subject to market fluctuations. Markets crash. History has shown us that. Values stagnate, sometimes for years, even decades. It's a risk, a significant financial risk that needs to be carefully considered. If the renter invests the $850 difference every month, consistently and strategically, that could potentially outpace the homeowner's equity over time, especially when factoring in compounding interest. Renting isn't just throwing money away. It's a lifestyle choice with its own set of financial implications. It buys flexibility, the freedom to move for a job or pursue new opportunities, predictable costs, making budgeting and financial planning much easier, and freedom from surprise repairs, allowing you to focus on other financial goals. The real point is that there's no one-size-fits-all answer. The math is complicated. It requires a thorough analysis of your individual circumstances. Renting can be a smart, strategic choice depending on your financial situation and lifestyle preferences. Don't let anyone tell you otherwise. Do your own research and make an informed decision. It's not about pride or conforming to societal expectations. It's about what works for you, your budget, and your long-term financial goals. Know the numbers, understand the risks and benefits before you decide. Before you scroll Zillow, ask, are you truly ready? The down payment, 20%, is ideal. Less, and you'll pay PMI, an extra fee that protects the lender, not you. Closing costs? Add 2 to 5% of the home's price up front, and you need an emergency fund, 3 to 6 months of expenses minimum. Lose your job, get sick. Those bills don't stop. If buying drains your savings, you're not ready. Check your debt-to-income ratio. Housing costs shouldn't exceed 28% of your income, total debt 36%. If you're house poor, you own the house, but it owns you. Be honest, don't let a dream become a nightmare. Ready to buy? Don't rush in. Get pre-approved for a mortgage, know your real budget, not just what the bank says. Set your own limits. Banks don't care if you can't afford a life outside your mortgage. Always get a thorough home inspection. It's your best defense against buying a money pit. If the inspection finds problems, negotiate or walk away. Think long term. If you might move in 3-5 years, buying could cost more than it's worth. Transaction fees eat up equity fast. Home ownership is a marathon, not a sprint. Make sure you're ready for the whole race. Protect yourself, don't get played. Smart buyers win in the long run. Is home ownership a scam? No, but it's not a guaranteed path to wealth either. The real American dream is financial freedom, not just a mortgage. A home is a place to live, not a magic investment. If you can afford it, want the responsibility, and plan to stay long-term, buying can be great. But if you value flexibility or the numbers don't work, renting is smart. There's no shame in renting. The only mistake is making a huge decision based on pressure or myths. Define your own dream. Maybe it's a house, maybe it's travel, maybe it's something else. Make informed choices, not emotional ones. Build a life that's rich on your terms. That's the real price tag revealed. Thanks for joining us. Don't forget to subscribe, like, and watch the next video.